Let's start by assessing business acumen. People always talk about business acumen. What is it? Can you run the business? Do you have experience? Do you have background? Do the people running the business have the skill base to run that business? These are all key success factors for business acumen. Somebody who's been successful before stands a very good chance of succeeding in the future. So when we talk about business acumen, very much it's track record and experience that will help through this. Not necessarily qualifications, although they are a help, but looking to see the practical application of qualifications and seeing if they will continue in the future. The second one that we'll look at, again, a key area to look at, as you've probably recognized from the introduction and in module 1, the buyer of the customer or the business's products and services. It can never be overemphasized that the ultimate risk for any business is their off-taker, their buyer. If the buyer doesn't buy, obviously, there is no business. If the buyer buys and doesn't pay, there's no business. If the buyer walks away for whatever reason, there is no business. So the key for every business is who the buyers are, and therefore that in a way should drive a lot of the key success factors as how do we match the needs of the buyer. And that's one of the key things every business should look at, is who is my target market? What do they need? How do I help fulfill those needs? Many SME businesses lack enough capital or sufficient capital. Depending on where you are in the world, interest rates can be high, can be low. Current environments, the Kenyan interest rates are extremely low on a comparative basis. Does that mean they're able to raise capital through borrowing money? Not always, because they very often lack the ability to provide collateral security. Capital is required because borrowing is cost. From a lender's viewpoint, they want capital in there to make sure there is a commitment by the owners of the business to stay with the business through the bad times as well as the good. Raising capital is not easy, but the key to raising capital is making sure that it is structured correctly. If a business wishes to borrow money for equipment, then it has term debt, more than 1 year, possibly up to 5 years. If it wants to buy a vehicle, it has term debt. If it wants to finance stock, it has short-term debt. Because the problem with mismatching the term of borrowing to the asset being financed is that the business could run out of money at certain stages, and success of the business could actually create capital problems for them. So therefore, looking perhaps when we're talking about the property and equipment and vehicles of a business, would it be better for a business to rent or to own? It's a very strong question to ask, because the capital required for ownership is substantial. And maybe once the business is established, you can move from hiring or renting or leasing, whatever terminology we want to use, into actually owning the assets. But at the outset, I would always recommend a business looks to see how it can survive by hiring in or renting or leasing.